Welcome to the Deep Dive, where we unpack a stack of sources to extract those essential nuggets of knowledge for you. Today, we're taking a comprehensive look at Elecon Engineering Company Limited. Now, this might not be a household name on everyone's radar, but they are actually one of Asia's largest industrial gear and material handling equipment manufacturers. For this deep dive, we've pulled from a fantastic set of documents: their Q1 FY26 earnings call transcript, the investor presentation, press releases, and their unaudited financial results. Our mission is to go beyond the numbers, to really understand the drivers behind their latest performance, what strategic shifts are at play, and maybe what the future holds for this industrial powerhouse. So, for the quarter ending June 30th, 2025, that's Q1 of fiscal year 26, what's the immediate story that leaps out at you from their overall financial picture?
Well, what's truly striking here, I think, is the demonstrable resilience and, frankly, the strategic smarts Elecon Engineering has shown. I mean, this is a company with a long history, founded way back in 1951, known for its innovation, its quality across vital industries like steel, cement, sugar, power, marine, you name it. And for Q1 FY26, they've reported some incredibly robust figures that don't just speak of growth, but, of calculated strategic shifts really paying off.
Okay, let's unpack these headline numbers then. Just for listeners, maybe those less familiar with Indian financial reporting, when we say Rs, we mean Indian rupees, and a crore is 10 million rupees. So when we look at their consolidated revenue, profit, and EBITDA for Q1 FY26, what do those figures tell us?
Right. So at a consolidated level, their revenue from operations stood at Rs 491 crores. That's roughly $59 million USD at current rates. And it shows a very healthy 25% year-on-year growth compared to the Rs 392 crores in Q1 FY25. This growth was predominantly fueled by really strong domestic business activities across both their key divisions, actually.
Okay, strong domestic push. And EBITDA.
Yeah, EBITDA earnings before interest, taxes, depreciation, and amortization, they came in at Rs 130 crores, which is a remarkable 41% increase year-on-year from Rs 92 crores in Q1 FY25.
Wow, 41%.
Exactly. And this significant jump pushed their EBITDA margin up to 26.6% for the quarter. That's up from 23.5% in the same period last year. So that jump isn't just a number. It clearly signals a significant improvement in their operational efficiency and perhaps pricing power this quarter. Shows strong underlying business health.
That's a fantastic operational picture. Now let's move down to the bottom line, the profit after tax. This figure, as you pointed out from the sources, it has some significant one-time items, doesn't it? Can you help us unpack what truly drove that impressive surge this quarter?
Absolutely. Reported profit after tax for the quarter was Rs 175 crores. That's an astonishing 139.1% growth year-on-year from Rs 73 crores in Q1 FY25. Huge jump.
Huge, yeah.
But you're right. This figure does include some notable one-time income. There's 25 crores from an arbitration claim settlement recognized in revenue, another Rs 10 crores from the same settlement, but recognized under other income, and then a substantial Rs 80 crores as an exceptional gain from reclassifying an investment in EIMCO Elecon India Limited.
Okay, so quite a few moving parts there.
Definitely. But even if you adjust for these one-off gains, the underlying performance still demonstrates a very strong and positive trajectory. It indicates robust core business profitability.
Right, the core business is still humming. So what does this all mean for their two main divisions? Industrial gears and material handling equipment. How did each one fare?
Let's start with the gear division. That's still the backbone, right? Contributing about 73% to their consolidated revenue in Q1.
Okay.
Its revenue grew by a solid 6.1% year-on-year, reaching Rs 357 crores compared to Rs 337 crores in Q1 FY25.
That's decent growth for gears, yeah, but I noticed the EBIT margin for that division actually dipped. What happened there? Especially with the overall performance looking so strong.
That's a really critical point. The EBIT for the gear division was Rs 66 crores, which is down from Rs 80 crores in Q1 FY25. And its margin fell to 18.4% from 23.7%. So quite a drought.
Yeah, why?
Well, there are a few key reasons. Firstly, they faced increased employee costs, and significantly, they invested heavily in brand building, especially overseas in Europe. Secondly, there's accelerated depreciation hitting them from a new manufacturing facility. It was capitalized in Q4 FY25, so it's operational, but it hasn't really started contributing corresponding revenue yet to offset that cost.
Ah, okay, timing.
Exactly. And there was also a product mix shift. Standard products made up 57% of sales in Q1, which is higher than their usual 50-55% range where the higher margin engineered products sit. Management, though, they expect these margins to normalize back to the 24–25% range starting Q2 as production ramps up.
Normalizing that quickly. That seems ambitious for the gear division margins. What gives them that confidence, that bounce back from Q2?
Well, it's largely tied to getting that revenue contribution from the new facility fully online, and also their continued push on the higher margin engineered products. As that new capacity gets utilized and the product mix hopefully shifts back, they anticipate, a natural margin recovery. It's really a short-term investment hit for a longer-term strategic gain. That's how they see it.
Interesting. Okay. And turning to the material handling equipment or MHE side, the growth numbers there are, well, exceptional.
Oh, absolutely. The MHE division really delivered an outstanding performance. It's become a significant growth engine for them. Its revenue for the quarter was Rs 133 crores. That's a massive 138.9% growth year-on-year from Rs 56 crores in Q1 FY25.
Wow.
Yeah. And even if you take out that Rs 25 crores one-time arbitration settlement we mentioned,
Right.
the revenue still nearly doubled, growing by 93.6% year-on-year. Just huge underlying growth. And the MHE division's EBIT was Rs 61 crores, growing 334.6% year-on-year.
300%.
Yeah. Reported EBIT margin was 46%. Now, even if you adjust for that arbitration income, the EBIT would still have grown by 155% year-on-year, with a margin around 27%. They are guiding for a sustainable margin of about 23% for this MHE division over the next 2 to 3 years. That massive jump in the MHE division's margin, it isn't just a win for them. It's really a testament to the power of shifting away from those lower-margin, capital-heavy EPC projects towards higher-value product supply and, crucially, aftermarket services. It shows how strategic focus can just fundamentally reshape profitability.
That's phenomenal growth, yeah, and a really clear strategic pivot paying off. What exactly is driving this robust performance in MHE beyond the margins? What's the longer-term strategy there?
Well, this division's performance is really underpinned by strong demand from core sectors, things like power, cement, steel. Sectors seeing a significant government push in India right now. And the key strategic shift, implemented since about 2017, is their pivot away from those large-scale EPC engineering procurement construction projects.
Which can be low margin and tie up capital, right?
It's exactly. Low margin, capital intensive. They've shifted focus solely onto high-value product supply and aftermarket services. And this focus on the aftermarket business, which has a much higher service component, was 41% this quarter. That's significantly contributing to the improved margins and more sustainable growth.
Okay, so that MHE strategy, product supply, aftermarket, clearly a game changer for margins and growth. Now, let's zoom out a bit from the divisions and look at the future. What do those crucial order books tell us? Is this sustainable?
Yeah, good question. The consolidated open order book stood at a very healthy Rs 110 crores as of June 30, 2025. That's an impressive 17.2% increase year-on-year, so good visibility.
Okay.
The gear division's order intake for Q1 was Rs 408 crores, a healthy 21.2% year-on-year increase. Their open order book is Rs 710 crores. For MHE, while the order intake in Q1 itself was Rs 134 crores, which was slightly down year-on-year. The company noted they've already secured several significant orders just in July, and their open order book for MHE is currently Rs 400 crores. So still a strong pipeline there, too.
Right. We also heard about some geopolitical headwinds, though, impacting their overseas business. Can you elaborate on that? How are they navigating that complexity?
Indeed. While domestic revenue in Q1 FY26 grew, as we said, by a strong 41.4% year-on-year to Rs 367 crores, overseas revenue actually saw a slight decline of 7% to Rs 124 crores.
Okay. What was behind that?
This was primarily due to a temporary hold on some product deliveries into the Middle East market, specifically impacting about Rs 14 crores, and it seems largely attributable to the regional conflict situation there.
The Israel-Iran conflict ripple effects.
Seems likely, yes. However, management expects these deliveries to clear in Q2 or Q3, and importantly, inquiry levels in most other overseas markets remain encouraging. And notably, their UK and Europe operations actually performed better compared to Q1 last year, so that shows some diversification benefits.
Right.
It's a prime example, really, of how even a company with strong domestic foundations can be touched by global events, but their ability to predict and mitigate these shows real agility.
And what about that ambitious Go Global goal? Increasing exports to 50% of total revenue by FY30. That's a huge shift.
It really is. That's their Go Global cultural belief in action, as they call it. They're aggressively strengthening relationships with global OEMs, original equipment manufacturers, and investing significantly in brand building across key international markets.
So putting money behind the ambition.
Definitely. Their overseas order inflow just for the gear business alone was Rs 119 crores in Q1, which is a robust 10% year-on-year growth. And for the MHE division, they secured an export order of about $1.4 million last year. They're expecting another $1.8 million order in Q2. And there's potential, I mentioned, for a much larger, like a $12 million order, possibly in Q4 FY26 or early FY27, as they really try to establish that global footprint. It really highlights their calculated long-term play for global market share.
Okay, and their position in defense, that seems quite unique, doesn't it? Elecon being the only company in India with a very specific capability there. Can you elaborate on what gives them that edge, and what's the market outlook for defense?
Yeah, this is a crucial point, I think, for their long-term growth story. Elecon is indeed the only company in India with the indigenous capability to manufacture these complex, high-precision gearboxes specifically for defense, particularly for the Indian Navy.
So it's quite specialized.
Highly specialized.
Yeah.
It isn't just supplying components. It almost positions them as a kind of strategic national asset for India's naval modernization efforts. They have a very positive outlook there. They're expecting orders worth around Rs 200 crores just this year alone.
Okay.
And what's even more significant is the potential for a much larger sort of Eris 1,000 crore plus order that's over $100 million, likely coming perhaps in Q4 FY26 or early next fiscal year, which would be executable over about 3 years. So this segment represents a substantial, likely high-margin growth opportunity, directly benefiting from the strengthening and, importantly, the indigenization push for the Indian Navy.
Right, big potential there. Beyond these impressive numbers and orders, what's the broader long-term growth strategy? Are there new capacity expansions or R&D initiatives underway that underpin this vision?
Absolutely. Elecon has a strong and pretty clear focus on strategic alliances, continuous investment in R&D, and proactive product innovation. They boast an in-house R&D facility staffed by over 100 engineers. They currently hold 2 granted patents and have 5 more applied for. So that's a testament to their commitment to staying at the forefront technologically.
And investment in physical capacity.
Yes, significant investment there too. To support this growth, they've allocated a substantial capital expenditure budget, Rs 400 crores, for the period FY26 to FY28. That's primarily directed towards the gear division, with an additional Rs 35 crores specifically for the MHE division this year.
Okay.
And this investment isn't just for general upgrades. It's specifically for general-purpose machines to support growth across various sectors, including things like high-speed gears, and crucially, preparing for those increased OEM export volumes they're targeting. They project that this Rs 300 crore capex alone should generate an additional Rs 500 crores in revenue, so indicating pretty efficient capital deployment, hopefully.
It sounds like they're not just reacting to demand, but actively building capacity for the future. And on the sustainability front, that's increasingly vital for all companies. How are they performing there?
Yeah, they're actively embracing environmentally friendly practices, and their recent reports highlight some tangible achievements. They've converted 95% of their lighting to LED, for example, shows a clear commitment to energy efficiency.
Good step.
And they've achieved a significant 40% reduction in wood use by switching to nailless packaging that has both environmental and probably cost benefits too. Furthermore, they generate approximately 60% of their energy from renewable sources, like wind and solar.
That's quite high.
It is. And as of January 2025, they've received approval for near-term science-based targets from the Science Based Targets Initiative, or SBTI, that commits them to significant greenhouse gas emission reductions. Oh, and they also reported 0 accidents in Q1 FY26, which underscores a strong safety culture as well.
Okay, safety and sustainability seem well covered. So let's pull it all together. What does this all mean for us, the learners, trying to understand Elecon engineering and its place in the broader industrial landscape?
Well, if we connect this to the bigger picture, I think Elecon Engineering's Q1 FY26 results clearly demonstrate a company that's adept at navigating short-term bumps, while relentlessly pursuing its longer-term strategic objectives. Their focus on high-growth segments like MEG, that's strategic geographic diversification, and the continuous investment in R&D and capacity.
Yeah.
It positions them exceptionally well, I'd say. They seem on track to meet their FY26 consolidated revenue guidance of Rs 2,650 crores.
Right.
And this isn't just about hitting numbers. It feels like a disciplined approach to value creation through operational excellence and strategic foresight.
It does seem clear they're focusing on value creation for all stakeholders, building a pretty robust foundation that could, potentially weather various economic cycles. They're leveraging their expertise being one of Asia's largest industrial gear manufacturers and that strategic pivot in MHE to capitalize on strong domestic demand from sectors like power, steel, cement, while also aggressively expanding that international footprint.
Yeah, this deep dive really revealed a company balancing immediate operational resilience with that forward-looking growth. And as Elecon targets that truly global footprint, aiming for 50% of its revenue from international markets by FY30, it really makes you ponder, doesn't it? Beyond the numbers, what fundamental cultural and operational shifts must a company undergo to transform from a domestic industrial powerhouse into a genuinely global entity? And how might that redefine its very identity? That was a truly illuminating deep dive into Elecon Engineering Company Limited's Q1 FY26 results. We hope you feel much better informed about the nuances of this industrial leader. We always appreciate you joining us on the deep dive. Until next time, keep digging for those insights.